Welcome to today's session and thanks for joining. In these live sessions, I demonstrate a technique for swing trading profitably in any market condition by taking only high probability and low risk 360 degrees trades. Here are a few images from my life in a village in Thailand. These images are available on my website superiorprofit.co on the images page. Greetings, I am Sagar Nandi, active trader using top-down, bottom-up 360 degrees analysis. Disclaimer, this demonstration is for educational purposes only. I am not an investment advisor. It is not a trade recommendation. Trading involves risk. You and only you are solely responsible for the outcome of your trades. Options trading can be risky. You may refer to the characteristics and risks of standardized options document from OCC to decide if options trading is suitable for you. I use Q for my trading decisions. It runs on Metastock and TradeStation platforms. Let's start with charts of instruments that often move the market. Dollar Index ETF UUP. For a long time, while it was moving sideways, I was expecting it to go up. And it has done that. It has now broken out of the trendline resistance in weekly. That is bullish. Thursday it broke out. Friday it pulled back somewhat. It was already going up for a while. It was above upper boundary, so the pullback is normal. I am continuing to expect that it will maintain higher high, higher low. If it comes back little bit, pauses at all these support lines, direction lines and trend lines, goes up from there, that will be the next trend following flow bullish setup. If UUP continues to remain bullish, that may put additional pressure on the market, though that inverse correlation does not always work. On the other hand, the other market level instrument that I always watch, that is always correlated with the market, that is the mega cap custom index. Here is mega cap custom index. In the weekly, it was going up, but for a while it was not outperforming the market so much. We can see that from the zigzag of the relative performance line. For last 3 weeks, the backdrop color in weekly was bearish. That was not bullish. Though SPY and even QQQ, they were making new all-time highs. Mega cap custom index had backdrop bearish color and we had a bearish headwind at the very top. On Friday, mega cap custom index pulled down. However, it is still not in a downtrend. The uptrend is still intact. We have multiple trendline supports. The supports did not break, though multiple market ETFs broke support. So relatively, you may say from that angle that mega caps are stronger. But that is from this custom mega cap index. If we look at individual mega cap stocks, they will not probably show similar strength, and you may find even shorting opportunities in some of the mega caps. If I have time, I'll have a look at the mega caps later today. At the right edge of this chart, it does not allow me to short because of the trend line supports in both daily and weekly. However, there is no reason to buy because both the daily and weekly momentum colors are bearish. Instead, if the trend line supports are broken next week, that will give clear shorting opportunities in mega caps. Q market breadth internal health check. Usually the market follows internal health, not the other way around. For a while, the market internals were not that strong. If we look back last couple of weeks, there were divergences in breadth charts between internals and the market ETFs. And the market follows the internal health, not the other way around. We had live proof of that on Friday. For a while, the market can continue to go up. Why it can continue to go up? Because many of the market ETFs, most of them in fact, are market cap weighted. So if a few stocks go up, that will lift the market ETFs up. But eventually, the higher mega cap, market cap, or large cap stocks will also have to pull back if market breaks this week, and that is exactly what happened. Let's look at the breadth charts. I'm trying to open all the charts live. If Metastock crashes, because Zoom is also running, then I will reopen Metastock, no issue with that. Total view, the broadest view of the market. Amazing, isn't it? Right on Thursday, Q total view breadth chart signaled a confirmed Hindenburg omen combining both NYC and Nasdaq, as it is the view of this chart. That was an alert. If you could be ready, you could short soon after the open on Friday and make quite a nice profit. You could almost like you could short anything and make a profit on Friday, almost like that. More ominous is the fact that on Friday we have another Hindenburg omen. And we had Hindenburgs earlier, but the market did not pull back. Why I say that? Because there was no distribution count associated with those Hindenburgs or the days following the earlier Hindenburgs. That has changed now. Now we have Hindenburg followed by heavy distribution. In what? In Nasdaq, broad market, NYSE, small cap S&P 1600, mid cap S&P 400. Which two pockets did not have distribution count? S&P 500 large cap and Nasdaq 100, which is most impacted by mega caps. So it seems though the mega cap custom index weekly backdrop color has been bullish for 3 weeks in a row, on Friday mega caps held up relatively better. Relatively better does not mean they went up. They held up relatively better to the extent that large cap mega caps together prevented S&P 500 and Nasdaq 100 from having a distribution count, but the broad market was already weak and they had huge distribution count of 4 on Friday. That is looking quite bearish. Now I talked about the divergence in several market recaps earlier. The divergence is very clear. The candle chart here, the total view, the broadest view of the market was going up and up and up, whereas percentage of stocks above 50-day moving average, the yellow line here, continued to make lower high. The same was true for advanced decline and up down volume. And eventually, as I always say in all the market recaps, the market will follow the internal health for whatever period it may try to go up because of the market cap weightage of many of the market ETFs, eventually it has to give way and follow the internal health of the market. That has started. Now on Friday it closed right at the low of the day. Usually when the market closes right at the low on Friday, further down move happens, and the same happens on the upside. If the market closes right at the high on Friday, usually next week continues the up move. So going by that tendency, I'll expect market to continue to move down next week. However, there are other signals that I am aware of that I will share that will temper the enthusiasm to short everything. Nothing will tell me to buy now, of course. I will show that. Let's look at the total view using weekly daily. I have been saying for many market recaps that unless these trend line supports are broken, we will not be able to short. Even when the bearish headwind came, even when the bearish indecision cluster kept on coming, I was saying that we cannot short confidently unless the trend line supports are broken. Well, all the trend line supports in daily are decisively broken now. Both daily and weekly closed right at the low of the week. What is more, we have jump high, price extreme high, came a big move down 3. Usually, if the stocks are weak fundamentally, this is not a stock, this is a custom index, broadest view of the market. But still, usually if it is a weak stock, these signals, price extreme high, jump high in this case, then came big move down, usually it leads to a down move. Again, that is telling me that we may expect further down move. On top of that, we have a bearish reversal on Friday. Even more reason to expect a down move. From the total view, let's drill down to the composites. Nasdaq and NYSE. Again, using longer period, the bearish divergence was very clear. I am not changing the interval to weekly, but these divergences are best observed in the weekly interval. Finally, the divergences caught up with the market and it fell sharply. The 3-month new high low was already weak, not at all near the high level, though the candle charts were making new all-time high. And now 3-month new high low has moved to the downside, so it is in the bearish territory. Percentage of stocks above 50-day MA in these two broad indexes also moved in the bearish territory but not oversold yet. 3-month new high low is also not oversold yet. That is pointing us to further down move ahead. Now drilling down even further, small cap, huge drop, bearish divergence was there. Mid cap, bearish divergence was already there, big drop. Large cap and Nasdaq 100. Everything had bearish divergence, everything fell sharply. percentage of stocks above 50-day moving average all moved into the lower half bearish territory but not oversold level yet. And 3-month new high low also moved into bearish territory, not oversold in any of the pockets. All of these are pointing to further down move ahead. After internal view, let's have a look at the external view of the market using the market ETFs and indexes. I usually use Q Elite on TradeStation, but today for some reason let me use Q Global. The reason is that I want to visually show the direction force and the momentum signals that are coming, the accumulated signals in all the ETFs. Let's start with SPY and then I will open it with the layout that has the visual signals. If you are using Q Global on Metastock, then you will find these visual indications, direction force count and the momentum count invaluable. If you watch back for the screen length, and you could of course scroll back further, you would notice for a very long time we did not have so many direction force and momentum coming together on the bearish side. Let's look at the commentary to read the directional forces first. What are they? Big move down, bearish fan out, bearish flow momentum, bearish pressure, bearish reversal and trend line breakdown. If I look at the momentum signals, what are the 6 bearish momentum signals? Bongo, Kahuna, Mobo breakdown, pocket pivot, PSA reversal, red candle high. Total 12 of them together. We have not seen such weakness almost like for as long as one can remember. And again for SPY also, it was a theme in many market ETFs across all the market instruments. For many market recaps, I was saying unless these trend line supports are broken, we will not be able to short comfortably. Now the trend line supports are broken in SPY with huge bearish force. It allows shorting, no question about that. Also notice here again at jump high, price extreme high, came a reversal signal and big move down with extremely high volume on the bearish side. Everything is pointing to bearishness, solid bearishness. QQQ next. I'll not open the commentary again. You may open it on your computer. Again for QQQ, 6 bearish directional forces, 6 bearish momentum signals together. Has not happened for a very long time. Weekly backdrop bearish, daily flow bearish, closing right at the low of the day and week. However, here I will not like to short because it has trend line support nearby. SPY did not have. And that is because probably the mega cap custom index also held trend line support. It is still in an uptrend. The trend is still intact there. QQ also did not break the uptrend yet. But it does not allow buying, of course. There are weaker pockets for shorting, that's what it shows. SPY is a weaker pocket than QQQ for shorting. DIA, huge bearish direction force and momentum signals. Here the trend line supports are all broken. Very bearish weekly, bearish daily, allows shorting, does not allow buying. However, here the recent swing high is quite far above the Friday's close. So I would not like to short DIA. There are instruments that you may find, stocks or ETFs, where the stop is not so far away. This is bearish. And lastly, IWM, by the way, I should not miss it. DIA also had big move down at price extreme high. IWM, again very high bearish direction force and bearish momentum signal. IWM broke one trend line support but stopped right at the next trend line support. So again, I would not like to short IWM itself. There are certainly other small cap stocks, individual stocks that can be shorted. Big move down, very high bearish volume. Now, what I did not specifically point out is that though the market fell down sharply, it is not easy to find any market level instrument, or many, I should not say any, it is not easy to find many market level instruments that broke both the yellow direction line as well as the 50-day moving average, both. For example, here IWM neither came below yellow direction line nor it came below 50-day moving average. In momentum chart, we have 50-day moving average and 100-day moving average, and in the entry chart, we have multiple direction lines. None of the yellow lines were broken. However, that is not to say none of the market instruments did that. And let me show you one instrument soon that broke both yellow direction line and 50-day moving average, and there is some importance to that. Before that, let's look at New York Composite, New York Stock Exchange Composite, and also NASDAQ Composite. NYA is the New York Stock Exchange Composite. Let's look at that. That's a very broad index. And here we have an example of what I just mentioned. This is one that broke both the yellow direction line and 50-day moving average. And now let me come to the point why it is important. These are traditionally acting as support, yellow direction line, 50-day moving average. If they are broken, then we may wait for the next support, which happens to be either the 100-day moving average or in Q charts the white direction line. Both are quite far away. What percentage far away? Let's find that out. About 4 to 5%, 4.79 here, about 4.8. So let's say between 4 to 5% further down move for the next support. Can it go straight down? Maybe, but if not, even if it goes up, it is possible it will come down and try to reach the next support if this support is now broken. This broad index also showed bearish headwind in the weekly chart. Usually that leads to further down move ahead. All trend line supports are now broken, allows shorting clearly, does not allow buying. And the other broad composite is NASDAQ Composite, IXIC. NYSE Composite and Nasdaq Composite are also market cap weighted, and here again we see the proof that mega cap, large cap tech stocks relatively did better and held up some of the pockets little bit better. IXIC, Nasdaq Composite, did not break all the trend line support. So I'm not keen to short QQQ, nor am I keen to short mega cap custom index. If that could be shorted, cannot be, it's a custom index. Also, I'm not willing to short Nasdaq Composite or equivalent ETFs because all of them are holding trend line support. Of course, I cannot buy them. And also I see, unlike NYSE Composite, neither the yellow direction line nor the 50-day moving average are broken. But there is also another instrument. Remember, if I go back to SPY, I want to show you one thing that will show that large cap and mega caps are still trying to help the market, actually helping the market. If you look at SPY, the yellow direction line is not broken. 50-day moving average is still not broken. The trend line supports are broken. But if I look at the equal weighted S&P 500 RSP, both the yellow direction line and the 50-day moving average are very decisively broken. Next support is the 50-day 100-day moving average or the white direction line. Let's calculate the percentage down move for the white direction line. 2.7, so between 2 to 3. So we may expect the broader market, not the large cap mega caps, because they tend to hold up the QQQ and S&P 500 better, but other non-large cap, not mega cap stocks, they were also rallying a lot, some of them at least, many of them in fact. We may expect a 3 to 5% pullback before the next support holds. If they hold, before the next support arrives. That's the white direction line or the 100-day moving average. So you may plan for that in case the market continues to fall down. Will it continue to fall down? Nobody knows, but so far none of the charts are showing anything that tells us that a rebound is likely. The breadth charts did not show oversold condition in 3-month new high low or percentage of stocks above 50-day moving average. Let's look at the market further using QH bucket analysis. That is oversold now. Does not mean it can bounce immediately, but it is certainly oversold. It also has sector industry stock breadth, shows where the market came from, where it is now, where it may go next. Bucket analysis, thanks to Dr. Jeffrey Scott. After watching whose videos I incorporated it in QH, made it 100% real time. Bucket analysis becomes oversold when percentage of stocks below lower Bollinger Band goes to 30-40% level. Now it is at 35.7%. It also becomes oversold when in one day the percentage of stocks below lower Bollinger Band jumps by more than 10%. Here it jumped between Thursday to Friday by a huge percentage from 2.7, let's say 3 to 35. So it jumped up by more than 32% in one day. That is extremely oversold condition. But extremely oversold conditions can remain oversold for a while. What we need to see is market to go up for one day, and if it happens on Monday or Tuesday, that may be the day to look for strong fundamental stocks and start to buy them. I will of course buy strong fundamental stocks in strong industries that are having low risk buy points, but that has not come. However, this is the first signal and probably the only signal I'm seeing that is telling that the market is oversold from some angle, at least one angle. If we look at sector industry stock breadth, it was very bullish last week, quite bullish, not very, but quite bullish. In fact, though the market ETFs were making new all-time high, the sector industry stock breadth was not that bullish. Now it has turned very bearish, but not extremely oversold yet. If it falls for 1 or 2 more days, it will be extremely oversold across all the periods. Then we may also have a second point from where we could expect a bounce. But right now it is bearish, very bearish, but not extremely oversold yet. QFinder technical breadth, we only profit by buying stocks going up or shorting stocks coming down. Technical breadth shows the overall posture to adopt and allows easy drill down to find low risk trade setups. Weekly technical breadth, bearish across all the categories, and it is more than 80% bearish in all the categories. That is extremely oversold. So that is a second point other than bucket analysis where from where we may expect a reversal. But in the daily interval, there is something that will temper that expectation. I'll come to that. But in weekly also, we have another signal, bearish headwind alert at the aggregate level. Usually that points to further down move ahead. So I think the stocks that were at very high price level, that is where the headwind comes. That is all the market ETFs, some mega caps, probably all the mega caps or most of them, and some stocks that had no profit at all. Loss-making companies that were going up like rockets at or near all-time high, those stocks are likely to come down. But some stocks, looking at the oversold situation, here also some stocks that were at a lower price level, they may recover or they may move sideways. In either case, it is possible to trade either using stocks or options vertical or options selling strategies. Overall, though, the weekly is giving mixed signal. It is telling some recovery in stocks, some stocks is possible, whereas some stocks at high price level are likely to continue to come down. If I look at Friday's technical breadth, very bearish across the board. But if you see the bearish setups, where are they coming from? Most of them are coming from price mid level, not low level. So that is not telling that market is about to recover. So QFinder is saying that both the weekly bearish headwind and the percentage of stocks that are giving bearish setups from mid price level is quite high. So both of them are pointing to further down move ahead. Q market level summary, the most important trading decision is whether and to buy or short or whether to stand as. Decision is clearly to short. Not the market ETFs where the stop is far away, which is most of the market ETFs, but stocks where the stop is not that far away, weak fundamental stocks in one way or another, and stocks in weak industries. There are plenty of such opportunities. Review of last week's trade ideas. Though the market fell sharply, last week I shared only one stock. The signal actually came on Thursday. That was CMG, Chipotle Mexican Grill. The signal came on Thursday. That was a flow signal. It came at jump thrust low, price extreme low, was accompanied by big move up. And I mentioned in the market recap that on Thursday I had already booked at least partial profit in the long stock position that I took based on Thursday's signal. After that, price started to go down and I closed the remaining stock position also with smaller profit, but profit nonetheless. I mentioned that I was also holding naked short put that can be continued to be held. That is my view. This stock is acting much better than what we saw in the market ETFs, we saw in the Mega Cluster Index, we saw everywhere. Edge, Finder, bucket analysis. This is acting much better. Why I say that? If you notice the volume in this week, we don't have large bearish volume in any of the days, which is very different from what we saw in the market ETFs across the board. We also see that CMG is holding the trend line support. We saw all the market ETFs broke trend line support. Total view broke trend line support, but this did not. So relatively, it is working better. Relative performance is continuing to gradually tilt up. So a short put position, and as I mentioned in the last market recap, it could be initiated on Thursday. I did that. It could be held over longer period, and that's exactly what I mentioned, that the stock position I wanted to exit if the stock started to pull back, but the short put position I could hold longer term. Relatively, the stock acted much better, and that is not only true for CMG. Let me show you other stocks that were at lower price point, relatively strong stocks, relatively strong, that held up quite well. One is TAP, TAP. If you see the weekly period, it hardly fell. Yes, it was already at a very low price level. It was at jump thrust low, price extreme low. And I in fact took a long position somewhere in this period. It was a covered call position. So it could be equivalent to short put. Short put and covered call both can be structured in a way so that the PNL graph looks exactly the same. So I have a covered call position in TAP and I am holding that also. I am not in a hurry to come out of stocks like that. I also shorted some instruments. Let me explain how I did that. I tweeted, if you follow me on Twitter, you knew that I mentioned that if the trend line support in QQQ is broken, and I mentioned that on Twitter, I think when the bearish headwind came in one of those days, that if the trend line support is broken, then one could take bearish trades or hedging trades using QQQ or TQQQ, the triple QQQ ETF, or one could use SQQQ, also inverse triple QQQ, TQQQ. So I'll explain exactly how I traded on this day when QQQ went up, made a new all-time high intraday and started to come down. Using the pivot real-time chart, I shorted using TQQQ. And I was watching till the market close, which I don't like to do, but I was watching, seeing if the trend line support can be broken. It did not break. So I booked my entire position profit on that day. I put a lot of importance to these trend lines, be it support or resistance, and I had no business holding on to the bearish TQQQ position when the support held. That was a wise decision. The trend lines helped me a lot, adding money to my account. Next day it went up. So me closing the TQQQ position with a profit was a good idea. Then I was watching the market, looking for time when the trend line support is broken, and that happened on Friday. I tweeted it right when the trend line support was breaking. I tweeted probably not the QQQ daily chart but the breadth charts of the market pockets, which included a chart of QQQ. When I shared that, it was already breaking the trend line support, and I initiated the TQQQ bearish trade, and I am holding the bearish position with a sizable profit. I also have one position using SQQQ. I also have a bearish position using RWM, which is the inverse of IWM. Why I use the ETFs? Usually I don't like to use the ETFs, but market was at all-time high. It was not safe to short stocks that were at all-time high. An individual stock may recover on a news or something, but the market ETFs will not find it so easy to recover unless Mr. Trump says that President Trump says tariffs on China are going back to zero. But if that does not happen, the ETFs may not recover immediately. And I do not have uncertainty from individual stocks. That's why I used TQQQ, I used SQQQ, and I used RWM as well. And that is exactly how I attempted to short QQQ. Earlier booked profit when trendline support held and initiated it again on Friday, and I did not have to book profit. I'm holding those positions now. I'll not go through all the mega caps. I showed you that the mega cap custom index is holding trendline support. But let me share one mega cap that could be shorted right now. I want to show it using the visual momentum signals. So let me open Q Global. Huge 7 number of bearish directional forces. 5 bearish momentum. Let's see them, what they are. I don't remember when last time any stock, not only AVGO, displayed 7 plus 5 bearish count signals on the same day. Didn't happen for a long time. What are the 7? Unbelievable, isn't it? 7 in one day. Directional forces on bearish side, big move down, bearish fan out, bearish flow, bearish pressure, bearish reversal, bearish stretch release, and trendline support breakdown. What are the bearish momentum signals, HSA-like signals? Bongo, Kahuna, Mobo breakdown, pocket pivot, red candle high. Red candle high, right? So it was at a high level and coming down. By the way, when you are scanning in Q Finder, when you see such large bearish counts or bullish counts coming together in both directional force or momentum, or even any one of them, you have even more confidence to take the trade, be it bullish side or bearish side. What setup is it giving? Let's look at the commentary on the entry chart. It has two possible bearish setups. They are both confirmed using weekly daily unambiguous checklist. One is a breakdown short setup, one is a trend following flow short setup. And I mentioned about finding stocks where or ETFs where the stop is not so far away. Here the stop will be just above the recent high, which is practically above Friday's high, just one day's candle. Not so many days candle like you will have in market ETFs. So AVGO can be selected as this week's short candidate, but I would like to do that only if fundamentally it has some reasons for shorting, and same for industry. Let's find that out. Fundamental scorecard in 100% real time using Vital. One glance shows that it can be shorted. It's overvalued. It has high earnings growth, but it is reducing for 2 quarters already. Earnings season is coming. I'll not be surprised to see it comes down further. Notice, interesting, isn't it? Though the earnings growth was coming down, the stock was going up, and this contradiction was happening in many stocks, especially if the coming earnings season falls short of expectation. Many of these stocks at a near all-time high, at jump thrust high, many of them at price extreme high, are likely to come down. Both the reducing earnings growth and the overvaluation allows me to short. Also, the insiders are selling. When the market is making new and new all-time highs, if you see insiders are actually bearish, you may pay heed to them. They know more about the stocks than we do. In itself, 100% of semiconductors peer stocks are down. That allows us to short. And this stock did not only go down on Friday. Interesting, isn't it? Whether you look at 10-day period or 5-day period, 2-day period or 10-day period, everything went down. Of course, it could be driven by Friday's down move, but that's not entirely true. 2-day period down is more than 1-day period down. So it was not going up at least. Now, how is the relative score of this industry? I would like to short this industry, of course. In itself, it is very weak, but I also want to check if relatively this industry is weaker compared to other industries. Then I will be happier to short the stock. Let's look up the industry score from QH. Relatively, it is one of the weakest, the third weakest, and it is also rapidly decelerating. So it's not only weak in itself, 100% peer stocks went down 100%, but it is the third weakest of all industries. That's where I'd like to short. Lastly, if I did all this, why don't we check the seasonality? One click away. Like most analysis in Q, October's seasonality is nothing great, allows me to short. So let me list AVGO as a shorting idea. I would prefer to, I don't have, by the way, I don't have a short position in AVGO. I have positions in TQQQ, which can be influenced by AVGO and other mega caps. I have SQQQ long position also. But AVGO, I would like to pick as this week's short, and if I am trading it next week, I'll prefer to short it using short call verticals. As you certainly have noticed, VIX went up heavily, so options are not cheap. I would certainly not like to buy options like buy naked put in this market. I would prefer to use short call vertical for trading options. There are plenty of other stocks. I just looked at one of the mega caps. There are plenty of other stocks that have very nice shorting opportunities. Some of them went up without the company ever making any profit. Let me show one stock. It's just one, and yes, it is a meme stock. So one has to be careful about shorting using stocks. It can suddenly jump up. But again, Open has options liquid enough, though the volatility is very high now. It is possible to short stocks like this. Open is not the only stock that had unrealistic rally for a stock that doesn't make any money. It's not the only stock. There were several stocks like that. Open went up from, what is this price level? 0.5 to 11. The company doesn't make any money. That was irrational exuberance at its highest. When it started to pull back one of the days, I don't remember when, I commented that this pullback was probably not going to be the last day of pullback. Now if you look at the weekly, this is the first bearish backdrop color candle with a bearish shape. Is it going to be the last week of pullback? I doubt it. Again, it's a meme stock. It's very risky to short meme stocks using stocks itself, but using options it can be played. Again, because of high option volatility, if I'm trading stocks like Open, went up like rocket without ever making any money on hype, I'd like to use short call vertical. But let me stick with a regular stock like AVGO as my trade pick for this week. If you carry out the 360 degrees analysis using Q like that, you will most likely find other trading candidates today. I'd prefer to go for shorting, not buying, just as you would almost every other day. Thanks a lot for attending. I look forward to seeing you in my next webinar, Market Recap. Have a great weekend, and as I always say, as these live examples I am quite confident shows, there is no reason not to do that. Trade profitably, be it bullish or bearish market. Thank you.